Good afternoon, team. It is Wednesday, October 18th. We've got Tesla earnings today. We've got Netflix earnings. Go ahead and post in chat. Let me know if there are any tickers that you'd like to review. I'm just getting into the private client fund. Locked some profit earlier. Pretty good swing shorts, team, right? We've added back to Tesla a few times. We'll come back to that. Locked in more profit on NVIDIA today. So from earnings, the spike through 485 into 515, we started building in to a pretty heavy short with a mix of short equity and short calls. We've taken profit all the way down into 415s previously. We watched this bounce through the end of September and beginning of October, and we started talking about selling additional calls over that 465 mark into 485s. So you can see we got a few days of continuation, continued adding into the short side of that as well. As we saw that rejection just over 475, then we've faded 465s, 445s, 435s, and we're almost back to 415s again. Pretty good 50 to 70 point move over the last week and just destroying the premium, right? So continuing to take profit out of that along with SMCI and Tandem. Right, pretty similar. We saw that spike back over 315 where we were adding short. We haven't seen as much of a downside move, but it is still crushing premium on this sideways consolidation. If we do break that lower band, then on this one as well, we've got room back into 235s. We've talked previously about the support versus potential to fail that, right? See what some of the top gainers on the day are. Obviously SMCI, NVIDIA, also KVYO. Continuing to trend sideways and lower, we have made new lows over the IPO. Equity position is only about 4.3% here. It is just under 5 figures, about to cross that mark again. There are multiple trades on this. We've had a lot of wins since the IPO and just continuing to decay. The call premium as well. Give me one moment here. It's a lot of scrolling. Let's see. Yeah, 25s all the way up to 35 short calls from November to April. Just getting all of those out of the money again, right? So we saw that bounce last week into 35s, and we talked about writing additional calls over that level, expecting it to reject. Still leaving some room for continuation, but it didn't follow through very far. You can see as it hit the top of the Bollinger Bands, there was a double top over the band. The first down day was right to VWAP and trended sideways for a good couple of weeks and continued to break down, right? Short 25 calls for November, still in the money, 24%. Short 30s for November, chopping in and out of the money, 37%. Short 25s into January, 18%. Short 35s into January, 13%. Those are on the lowest end. I've still got some that are out of the money above 35 and 40s as well. We can look at writing some new ones since there's plenty of profit in play. Spreads are a little wide. Volume is light, but premium is there. Wherever you can get your fills, where you're comfortable. There's not really a 30 delta. You're looking at 39 versus 23. If you go out to January 40s, they're about 100 a piece. January 35s are about 215 right now. April, I'm going to be selling more 30s and 25s. I'm selling in the money. I want more of the delta to be pretty high. When we do get that breakdown of 30, if we get into 25s pretty quick, that'll crush those. Again, you've got to have profit in play, progressively locked if you're going to be selling in the money. If it's a new start, I would still stay out. You can look at the short 40s or 35s into April. I think there's plenty of room and time on those. Obviously, not a lot of action on this. It's pretty thinly traded. It doesn't even really have a volume chart, which is good for us. You know, it's not going to get explosive moves, and the time is still a factor in the decay. Staying out of the money is pretty low risk. I think you can collect some still decent premium on this before it breaks down new lows. Let's go to Manchester. Man U, I gave this for free on X. Previously, we had sold over 25s and we've gone over that trade. We saw a lot of sideways consolidation at the $20 mark. On this day was a fast crack and a bounce. We started shorting into 20, expecting that to roll over and give new lows. The next day was a 30% rug pull and it bounced again back over 18, where I was able to add some more in the morning. We've gone sideways yesterday and today, so still continuing to decay premium. But those short ads just from 2 days ago are already through 35 and 40%. Short 17s into January, 34%. It's fluctuating right now. Short 18s into January, 36%. Short 19s, 41%. Short 19s into March, 12%. I'm going to write some more March 18s right here at the money, or just out of it. You can see there was no retest as well. Over 20 after we started the initial short, I was still leaving room for the gap, but it did not need to close that. We've just kind of stair-stepped lower, trending sideways, and not really much of a reversal. Seasonality wise, we could see something in December, but we've still got a month and a half of sideways action at best if it doesn't continue to fade, and taking that premium profit progressively. I also sold the CFDs. Those are 10.3%, and I exited and averaged back into the equity. It is 9.7% swing short on MANU. One moment. All right, next we have Netflix into earnings. Obviously, we've been swing short and progressively taking profit. A lot of the equity core was built on that bounce back over 435s and 445s. You can see that was a continuation reload after the previous spike into 500s, right? So swing short on this. We've progressively sold premium since the middle of summer, June and July, continuing to take profit. You can see how long it spent over that 435 to 445 area, but once it broke down and really rejected that, failed 415s and got into 385s with a progressive move into 345s today, right? We sold a lot more premium on this sideways action, just continuing to wait for the bounce that never came. And you can see we had an alert out for a retest that never hit, back over 420. That was put out as 415s failed the first time. Still with our levels, progressive moves lower. You can see 485s, 445s, 415s, 385s, and 345s, right? And if you just standardize entries like that and progressively take the profits, you get a lot larger move over time. Obviously, you can collect a lot more premium over a longer term versus trading, within the same month. Short 335 calls for November, 71%. Short 345s for November, 55%. Short 320s December, 47%. Short 325s December, 33%. Short 330s December, 21%. I still have previous puts as well. This is a progressive move through the entire year. Back here, we sold puts 6, 9, and 12 months out. Got that progressive move higher. We were taking profit through the entire run, and then obviously selling the calls as we expected it to roll over. All of my puts are still just barely out of the money. I've got 340s into January that are still 43% profit, and 320s into January that are 36% profit on the short put side. Then I still have some from the top in December, the short 430 calls that don't expire until June, 67% profit. Right? By trading the entire range of the chart over the year, you can collect a lot more premium up front and progressively take that profit. We built in very large and heavy for the short puts with long equity, progressively took those through 300 into 485, and then flipped it short, and we've made almost the entire range all the way back, right? We're getting paid on twice the move in the same amount of time that people are trying to invest and hold for the long term. You definitely need to be selling premium if you're holding a stock. Got some finals on ON. Short 32.50s for January, 84%. Short 35s for January, 91%. Those were built on the move over 35. Again, you'll see that we often standardize our entries and work with the same price points across a range of tickers and sectors. That's the key to timing it properly and collecting better premiums as well. You can see on that bounce from the end of August into September, went from 27s to 35s. And took about a month to do that. Within 2 weeks, it was making a new low, right? So over 35s, we shorted into that. Then you can see the breakdown through 27s, the previous support. As it rejected 2750s, we saw new lows under 25s into 23s. We've progressively scaled out of this. I've got some $30 calls that expire this week, 100% win. Still a 5-figure trade. I'm going to lock that in today. Then equity swing short, ON is 11% profit here with progressive exits and adds back to core. Just like with the options, we're progressively taking profit out of the equity and then adding back into the short for the next breakdown or breakout, right? On this crack, we're covering equity into 30s. We're waiting for some sideways consolidation to decide if it's going to bounce. As we see that it's not bouncing, we're shorting into that same 30 on the pushes into the upper band, expecting that breakdown through 2750 into 25s, right? That's what gave the progressive profit. I did add some more through 2750 as I took profit out of there as well. You can see covers under 2750 and then the bounce back over where I added back. That left me with an average of 28.38. Obviously took more profit under 25s as well, but I haven't added back to the equity yet. We'll see if we get a bounce. I'm going to leave an order alert out a little bit higher. I wouldn't be surprised to see a faster spike. Again, anything over VWAP, I'm still looking at selling some longer term call options, and this should be flat through most of the year, maybe a bounce through November that's invalidated through December. All right, with Roblox, I'm taking more profit and adding back. Again, another one, a mix of swing short equity and short calls. We saw a bounce from 24 into 46, which was a pretty good run. Sorry, after the gap down, we failed 30s and we pulled into a low of 25s. You can see as it touched the lower band, it then reclaimed VWAP and got back into 30s. This is the area where we were adding back, still risking a bounce and continuation into 35s. Over the last week, we sold additional short calls on Roblox, and I've got some finals to take profit on as well. I'm going to write some more of the short 30s into January. And those are right about 400 today. That's at the 58 delta. If it's a new start for you, you can still stay over 35 to 37.50s. And that would be the 38 to 30 delta. Going for about 200 to 150 right now. I am going to collect more premium with progressive exits and adds. I can risk larger bounces. So I will write those right now and also add some equity to it as well. The other thing I'm going to do is cover some more of the premium. You can see as far as seasonality, we would typically see a larger bounce through the end of October, but I think we've already kind of topped out on that. Then a rollover into November that makes new lows into end of year, right? This should give you some conviction on selling some out of the money premium. Barring a larger move, there is still a gap to close up at 35s. Over time, we still might be able to progressively make that, but I think there's still a lot of premium that you can fade right now. With Roblox, I've got short 35 calls for January, 80%, short 40s January, 86%, short 45s January, 91%, and short 45s for June, 73%. I'm going to write some more of those as well, probably at the 35 strike. I'll go April 32.50s. They're about 450 a piece right now at the 54 delta. If you want to go into April, you can look at 40s to 42.50s. And for June, I'll write the 37.50s at the 45 delta for about 385 a piece. 31 delta is at the 45 strike, and those are about 230 a piece. All right, so A lot of premium available, a lot of it progressively locked in. I've got 2 that are 5-figure wins, 2 more that are 4-figure wins, and 1 that is fluctuating, getting into its first 1,000. I'm going to write, along with the 35s, the 30s into January, then yeah, April and June as well. All right, Rivian was a pretty good crush today. All of the EVs across the board, all of the China tickers, all selling off with Tesla, right? So obviously Tesla sold off from 255s to 242s currently, not that big of a move, but we've seen some outsized sympathy moves with some of the other tickers. We talked a lot about Rivian adding back into those shorts over 25 and 2250 as it rejected and broke down, and then again over 20. And we're breaking the lower band. We're about to make new lows over the previous couple of weeks. We'll see if it's able to hold 1750 or chop around, or if it fades right into 15s, right? But wow. Yeah, I've got a lot of strikes on this. Progressive exits and adds back to core on equity have me sitting at 5.7% swing short on the equity. I was writing $15 calls while we were at 20, looking for those to go out of the money. I've got everything from 15s up to 30s, a mix from November to January and June. And my January $30 calls are a 98% win here. I'm just going to finalize those. The short 15s for January, 41%. Short 2250s, 66%. Short 25 calls, January, 77%. March, short 2250s, 54%. June, short 2250s, 46%. June 25 calls, short, 58%. January 2025, 45% on 25 calls, and January 2025, 49% on 2750 calls, right? And all of those were built within the last couple of weeks. To be progressively into 50 and 60 and 70% wins that fast, there's a lot of premium that you can collect on very low risk on the right tickers, right? So we've been swing short again since summer, topping out. This entire ramp I called was gap on air into earnings. You can see as earnings came out, never recovered those levels over the last 3 months. And we're progressively making new lows back into that $15 consolidation for the breakout. Basically over under on the year once we get there, but there's still room and time for it to bounce and chop around. We'll just continue progressively taking profit. Along with Rivian, we are swing short NIO, LI, and the others. We've gone over those. I'm not going to recap them too much. The other one that we have in play and added into last week was Roku. Right, so a good little bounce over VWAP into 65s and 70s. This is a progressive adds back to core after our last short, which was after our short before that. All of these are in the vault. You can go back and study those progressive moves lower from 95s and 85s, then from 85s and 75s, then from basically 75s and 65s with follow through, right? So equity swing short after progressive exits and adds back to core, sitting at 11%, a 5-figure win. Short $60 calls into January, 45%, and short $70 calls into January, 61%. That's just in a couple weeks again, right? So definitely go and study the charts, study the options, and you can pull those up side by side. And you'll see that the stock doesn't need to make a very large move in order to really crush the premium on the options, okay? So those strikes were sold between about 12 and 1300 a piece and 17 and 1800 a piece. They're already, not even worth half of that. But you can collect a lot bigger premiums, often $1,000 to $2,000 at a time, and get those progressive moves at the right time with a lot of premium crush. And then just be progressively taking that profit and scaling out of it and going to find a new trade. All right. Along with Tesla, we did also write calls on TSLY. Swing short equity with progressive exits and adds back to core. We built this just over 1450s. There was no bounce after that. We just continued writing the call premium as well, expecting Tesla not to break out. Obviously, this would have no reason to either. You can see that sideways consolidation where we initially Wrote the short calls and built into the short equity. I was already covering the first time under 13s, and then we started adding back over 14, right? So got these adds back to core. We've gone sideways for a couple of weeks since then. Now we're breaking that lower band again. We'll see if we fail that 1285 mark for continuation. Equity swing short profit is 4.1%. I've got short November calls at the $12 strike, 44%. Short February at the $12 strike, 23%. The spreads are a little wide on this. You can ride it where you want. Pretty much anything around here is going to decay, right? You can see these are down 41% at the 13 strike just in a day. There's still room and time if you're right into 12s to go into February. You can try for a bounce after earnings. They might be able to juice it a little bit. For a $12 strike to be still collecting around that premium is pretty decent. We'll just continue progressively scaling out, right? If you didn't see our original video on TSLY and NVDY with the Yield Max ETFs, go ahead and DM me and I'll have Kylie send that over for you. NVDY, very similar. We built in after TSLY. So over 22s, we had rejection into 2250s where we were selling the premium on very low risk. Obviously, there was no bounce beyond that, and we've seen a lot of progressive move lower over the past couple of weeks. Again, what I want you to note on the charts is our entries and our timing and the risk versus the reward, right? Very little risk of this breaking out from our short entries. While a lot of people were trying to chase the bounce and talking about getting their next dividend payout, we're building into a short. And sorry, I'm scrolling through NVIDIA. NVDY, so 3.8% swing short equity. I did add back to this pre-market today, progressively taking profit, walking out of it. You can see that breakdown from 2250s straight back to 20s within 3 days after, a good month and a half almost of sideways consolidation. So it doesn't take very much time to get those moves lower. It takes a lot longer to get the bounces into the highs, right? So that's the best time to sell the premiums is when it's trying to bounce and rejecting those upper bands. And as soon as it fails and rolls over and starts breaking those lower bands, you're already into profit. Then you can sit through bounces and progressively take it out over time. All right, along with NVIDIA and SMCI, we've also got AMD. Built in pretty heavy over 115s on the short side. We've been progressively taking profit through 105s and 95s. We talked about this bounce back into 110 last week, the same time as Tesla and NVIDIA were bouncing. We were writing short calls and adding back to the short equity. I've already progressively taken out of the equity and averaged back in around 106. I'm sitting at 3.9% on the swing short equity currently after profit locked in. We wrote a lot of calls at the 100, 105, 110, 115 level with a lot of conviction, right? So I've got some earlier ones in play from this initial breakdown of 115s and 110s. And then I've got a whole new batch that we wrote at this retest of 110. We've already taken profit all the way down into 95s, right? So by progressively taking profit out of the short calls that are in play and waiting for the proper bounces, then you can add back to a core that's already profitable and generate even higher returns. So January 105 calls, these have been in place since the original one, is 42% profit. The strikes that I started over the last week are already March 105 calls, 24% profit, April 100s, 21%, June 105s, 20%, June 110s, 29%. I still have a mix of short puts as well from previous trades. These were actually written back here on the first pull into 195. Started writing short puts against the band. We got an extra pull lower and wrote the puts there as well. Then I've progressively taken profit out of those as we pushed into 115s and 110s. The great thing about this is by properly timing it, you can sell the puts at the low end where you expect a bounce and the calls at the high end where you expect a fail of a breakdown. And then it turns into a calendar strangle where you're profitable on both sides from the very first week, instead of watching one side go so far against you that it becomes painful, while the other side doesn't even balance out the loss of one, right? So the key to a strangle is to calendar it with proper timing and progressively take the profits out of both sides. So my 95 puts for November are still 34% profit, and I've seen those as high as 60 and taken that profit out. I still leave them in play so I can sell more calls against it. My November 100 calls are short are 52% profit, right? So I've got almost 100% between the two. I can close them anytime I want, and I can still leave them in play because they're progressively winning. All right, team, we're going to wrap up on that. Any other tickers that you want to take a look at? Go ahead and post those real quick. Along with Carvana, and Hertz, we still have AutoNation in play as well. We built in that short over 180s, expecting a rejection of 185s, and got that really good sell-off into 155s, where we were already taking profit in July. There was a lot of sideways consolidation at the 160 mark, where we were building in short, expecting 165s to reject. That was never retested. And as we failed 155s and 145s, we progressively went out of a lot of strikes. I added more back into Carvana and Hertz and didn't write as much with this, but I've still got expiring this week, October, short 135 calls that were written while they were 30 points in the money 2 months ago. Okay, from back here, I was shorting 135 calls, expecting those to go out of the money and giving them less than 2 months to expiration. Now we're coming into expiration and we're chopping around 135 to 140. 86% profit, 5-figure win, just about $17,000. I'll post these for you on X. If you have any questions, go ahead and DM me. Make sure you're following so you see the new ones as they come out, and let's write some premium together. All right, thanks, team. We're going to wrap up on that. Have an awesome day, and we'll be live again tomorrow morning. Trade safe.